Hello, guys, and welcome. Today is Monday, and tomorrow the market opens back up from a 3-day weekend, and it is looking like it is going to open up pretty positive. Right now, the S&P futures are at 29.93, just 6 points off of the 3,000 marker, the almighty round number. Now let me go over a few key things that you're going to want to take note for this upcoming week and where this thing might go. So the first thing is we're going to open up a bigger picture chart. This is a 2-year, 1-day chart. So this goes back 2 years. Each candlestick is 1 day. Now you could see that the point of control right here is at 3,030 level, right at that 3,030 level. And if I go ahead and I draw a line at that 3,030 level, you're going to see that this was support back here, right here. All through here, right there. So key level, definitely that 3,030 level. And then I'm going to take us down to a 1-hour chart. The level that we did break above that we haven't touched yet is 29.82. And that is right about there. So we kind of gapped up right on that level. I would expect us to come back and hit that level at one point before we end up moving higher. But as you can see on an hourly, looking back 30 days, we are now breaking out of the bigger profile range. So that bigger profile range was about from here down into all the way down to here. So this was the range, and now we are cracking above it, and you can see the volume drops off. So we are going to actually now, I'm going to open it up to a 6-month day to show you guys a little bit more strategically, because the time frames will change how the volume looks. So we were in this big range. You see how the volume node is very large in this range. So that's the range that we were in, and now we are broken above it. And you could see right here that this level is going to be the next area where there were some buyers and sellers. So that's right at that 3,030 level. Now, very important, guys, when we have a gap up day, meaning the market opens significantly higher, these are usually trend days to the upside. Okay, so we are looking for a gap up, a small continuation, a pullback, and then a trend day to the upside. Okay, so the gap up, trend day to the upside. Okay, gap down, we filled the gap, range. Gap down, trend, came back up. Gap down days are, they're supposed to be a trend day to the downside, but it's really hard for us to see some selling. It has been. So quickly, just gap up, trend day up. So we're going to gap up, trend day up into that 3,030 marker. But be on the lookout for a pullback into the 29.82 level. We want to see us break off 29.82, and then also 3,000 is going to be a level just because of the fact that it's 3,000. 3,030 is the ultimate target. 3,000 is the level to get above, and then that 29.82 is going to act as a level that the price is going to be attracted to. Okay, and then I don't know how the market keeps going higher. A lot of people are confused on it. So this could be a false breakout, and then a reversion back into the volume profile average, which is 28.17 down here. 2817 is the point of control over the last 30 days on a 1 hour chart. Okay. So we are now breaking out of this zone, coming up into the point of control on a daily chart, which is that 3030. Like I said, probably going to retest the top of this, or this level right here, 2982. And then our ultimate target is back up here at the 3170 level. So you can see at that 3170 level, we had previous support or resistance. So this is a supply zone or demand, and we would typically like to see, we're going to see a bounce up to this point of control. We'll probably see it go a little higher, right up into that 3080 level, probably come back down into somewhere around the point of control again, back up, could come back down again. You never know, but our ultimate target is going to be this level up here, the 3170, then a small pullback into this area. And then typically, if we were to break out again, then our next level is this one right up here, 3300. Okay, we can see how that happened. So that is our bullish scenario, and that is most likely going to play out unless everybody gets long. Then the market will surely take all your money, and it will go short back into this zone, and it could be a major reversal, and the bears would win, but that is probably highly unlikely considering the federal government has the stock markets back. So there's my scenarios. Quickly want to go ahead, talk about linear regression trend line. This is very important. So a linear regression trend line, basically it takes all these prices and it averages out and it puts a line through it. You could use that with a drawing tool on Thinkorswim. So right here you have the regression channel or the regression line. I'm going to use the channel. So the channel, you take it from the lowest point, and as you go up, it's going to, the middle line is going to be the linear regression line. So you could see it's going to make this channel. We'll extend it to the right, and this is our channel that we are in right now. So you could see that the actual linear regression channel on a weekly chart, so a very longer time frame, sets up right at our markers of that 3170 area. But we are going to see a lot of resistance right in here at that 3030 area. We are going to see some resistance in that area unless the market really just flies higher. Here we go. Pretty simple, guys. We got that 3000 marker to get to, and then 3030 and 3080 and then 3170. And then we do have that magnet spot below of 2982, which we are going to want to keep an eye on. I do expect the market to come back to that during trading hours at one point, maybe sometime in the morning, back to that 2982, and then a takeoff up into the 3000, and then that 3030 point of control. Okay, so that's my main bullish scenario, especially with the gap up. You have a very high chance of the market gapping up and trending up. So, there's two types of days in the market. There is a range day where the market will go make a high, make a low, and then go back up to that same high, and then maybe back to the low. So that's called a trending day or a ranging day. And a trend day is where the market opens up and it never really looks back, and it rides higher and higher up until lunchtime hour, then it'll kind of mellow out, and then you'll either see a continuation when you get back from lunch, or you'll see the market kind of sell off and profit taking towards the end of the day. So it would look something like a up and then a rollover. That is, so like gap up, then it trended all the way up until about 9 o'clock, and then you saw the rollover into the close. Okay, so that's kind of what a trend day will look like. Or you'll see the gap up, then trend day all the way up into 10 o'clock, and then trend day up into 10:30, lunchtime chop, and then into the close it rallied. And then a major sell-off. Man, I don't know how people can trade this crap. So anyways, guys, that's for the S&P tomorrow, so keep on the lookout of that. Two sectors that we're going to be watching carefully that might take this thing higher are going to be financials. I do hold positions in the XLF, and I also hold positions in the SPY. I have the 300 calls set up for May 29th, so that's good. It was a hedge really against my shorts. I'm short Procter & Gamble, McDonald's, Boeing, Tesla. I am long some Win, Verizon, XLF, so we're doing good. If the market does go higher and if it goes lower, we're also doing good. I will be looking to be day trading, so definitely want to join my Discord group where I will post trades and what I see happening in the market. Okay, guys. Well, thanks for watching. Hope y'all have a good one. Take care.